So you've saved up your first $1,000. Nice work. In this video, I'll show you exactly how I would go through and invest $1,000, the best possible scenarios coming from a 20-year corporate accountant and analyst with 20 years of investing. This will show you diversification, get the most bang for your buck and upside growth potential, and save just a little bit of room for extra power and earning potential. Now, I am many things: a corporate accountant, analyst, father to a set of troublemaking twins. However, I am not a financial advisor. You should always consult a financial advisor for any of your investment decisions. Now, back to the video. Step 1, start with the core, the first $400 into an S&P ETF, such as Vanguard's VOO or iShares IVV. Both of these are S&P 500 Standard & Poor's Index trackers, and they have industry-leading low fees. These ETFs give you exposure to the largest 500 companies and offer simplicity, diversification, and provide long-term growth. As well, they're historically reliable. Each of these ETFs have a management expense ratio, the fee you pay for managing and holding these, of only 0.03%. That's remarkable compared to what a financial advisor would charge you for a similar mutual fund at a bank. If you're in Canada, you can use a CAD-listed S&P product or keep a low-cost US ETF in a registered account. Just be mindful of the currency conversion. The key, buy the broad S&P exposure and hold it for the long run. Step 2, buy another ETF and put $100 into that. So you probably want more exposure beyond the normal S&P 500 index. That's why VTI is a great alternative option. VTI is a total market ETF and covers the entire US market and has a management expense ratio also of 0.03%. For Canadian investors, you can also pick XIC or VCN as an alternative option. Just diversify beyond the normal S&P 500 index. Step 3, and now I understand this might not be for everyone, but it has enormous growth potential and a proven track record. Invest $100 or say $50 to $100 into Bitcoin. If you're comfortable with more volatility, this is worth a look. It has enormous potential returns. However, there is an inherent amount of risk, like with any cryptocurrency. Buy it from a reputable online exchange platform and then continue to hold it for the long term. I really can see Bitcoin going places in the future, and many people looking back saying, if only I had bought it when it was a lot cheaper. Right now is the second best time to buy Bitcoin. Of course, the best time would have been 2009 when it first came out, but. Step 4, invest $300 into the Nasdaq. This has enormous growth potential. So don't waste your time with penny stocks. Invest into an ETF that actually tracks the Nasdaq 100. My recommendation would be Invesco's Triple Q or a similar fund. Triple Q historically tracks and focuses on growth and tech companies and firms. However, it's more prone to volatility, but there is enormous growth potential beyond simply the S&P 500 and what it can offer. The expense ratio is around 0.2%, but it gives you targeted growth exposure. Keep this as a satellite position. It's good to have in your back pocket, way off in left field. Buy it, and then continue, like I always say, to hold it for the long term. In case you're new to my channel, I'm Aaron, a 20-year corporate accountant and analyst living in Western Canada. I talk about personal finance, investing, and investment portfolios. If this sounds like something you'd be interested in, consider subscribing to my channel. Step 5, keep $100 in cash. This will be used for short-term opportunities, something you see that looks like it has great potential. Also, it helps you rest a little bit assured if the markets start to wobble, and you have it in your back pocket for safekeeping if, say, you have to pay commissions, fees, whatever the case may be. Execution tips. Open a low-fee broker account that supports fractional shares if you need them. Place market or limit orders depending on your comfort. Use dollar cost averaging where helpful, especially if you plan to continue investing. Watch commissions and currency conversion fees if you're a Canadian investor buying US ETFs. These costs add up more than tiny differences in expense ratios sometimes. Risks and maintenance. This plan isn't a guarantee. It's a very good, solid plan, but markets go up and down. If your Nasdaq portion becomes much larger, rebalance annually. Visit your portfolio and calculate how much you're comfortable with. Try to keep as even balance as you can. Keep a long-term mindset. I don't know about you, but I feel most comfortable in buying stocks that I can hold for the long term and feel very safe and secure. I don't give in to the hype of, oh, you got to get in on this newest cryptocurrency now, or someone says, hey, buy this stock, it's going to the moon. I do my own research and analysis, and eventually you'll get there. You'll be so confident in your abilities that you'll rely on yourself to filter out good information from bad or questionable. One of the keys to investing is being consistent. That'll far outweigh any impulse decision. So if you start investing $1,000 consistently at set intervals, say $200 a month even, but you do it consistently over time, that'll far outweigh any $5,000 or even $10,000 split decision on, oh, I got to buy this stock now, or I got to take a gamble and risk. Consistency beats any prediction. A quick recap. So what I said is $400 into an S&P ETF, such as VOO or IVV, $100 into a total market or Canada ETF, such as VTI/XIC, $100 into Bitcoin, $300 into a Nasdaq ETF, such as QQQ, and keep $100 in cash. All of these are low fees, diversified, and realistic. Congrats, you're done. So if I was able to save my first $1,000, this is exactly what I would do with it and what I have done in the past. If you're interested in more videos on personal finance and investing from a 20-year corporate accountant, check out 2 of these great videos here.